you have a practice or are you running a business? Valuation is the ultimate KPI.
Hey there, it's Mike Langford. Welcome to another episode of the Modern Financial Advisor Podcast, brought to you by Truelytics, the one and only comprehensive advisor transition management platform. Now, this week, I want to start the show off a little differently. I want you to close your eyes and spend a couple of seconds thinking about all of the repetitive tasks that you do in your business on a day-to-day, week-to-week, month-to-month, quarter-to-quarter basis. Now, whether these are tasks that you're doing, your executive assistant is doing, your junior advisor team is doing, people in your business are doing lots of things routinely, and they're important, but they're not the best use of your time. Like if you could have a computer doing these things, you'd have a computer doing these things, right? You've got to set up meetings. You've got to send out reminders. You've got to send out requests for information. You've got to send out paperwork, right? And a lot of times it's the same stuff. It's the same process, just like, put in a different name here or, put in a different account number here or whatever it is. But it's just the same stuff, but it just has to happen. Well, your lucky day is here because my guest, Matt Reiner, the CEO and co-founder of Benjamin, is here to tell you that they've created a solution which is a digital virtual assistant powered by artificial intelligence that does exactly that. It takes all those repetitive tasks, learns how to do them, and does them for you so that you can spend more of your time focusing on, bringing on new clients, expanding share of wallet with your existing client base, focus on client retention or building just better rapport with your clients and maybe recruiting, all those types of things you want to do to move your business forward, right? But you kind of didn't have the time because, we all have 24 hours and those repetitive tasks suck up a lot of time. Now, here's the really cool thing about Matt that I think you are going to dig. He literally grew up in the wealth management business. His dad grew a very large registered investment advisor in Atlanta called Capital Investment Advisors. And upon graduating from college, Matt, as you might imagine, joined the firm and he was an advisor. But he had this idea of making the business more efficient. And he started looking around and seeing these repetitive tasks in their business. And they started investing some money and time and energy to create a solution that would solve that problem. And once they noticed that it was solving the problem for their business, they said, you know what? Maybe this is a business. So he launched Benjamin and started serving the broader wealth management space. And so he's here today to share the story with you and share how it can help you in your business. So really, really cool stuff. Now, coincidentally, Truelytics is doing something very similar with their new solution called RIA Base. So check it out at riabase.com. Truelytics has been doing performance benchmarking for clients for years, right? That's the whole Lytics and Truelytics is about analytics. And so clients come in and they put in a whole bunch of information and it creates this really cool and actionable evaluation scorecard with 50 different KPIs and evaluation for the firm. So it's really cool stuff and it benchmarks your firm against others in its peer group. Well, that type of intellectual and computational firepower is now being applied to the entire population of SEC registered investment advisors. Truelytics went out and pulled in all the public data from the SEC on every single RIA they have and applied the same benchmarking firepower to that population. And you can go there, riabase.com, and see how any single SEC registered investment advisor is stacking up against its peers. You can take a look in your local market, see how your competitors are doing, see how you're doing against your competitors, or use it as research to kind of find clients you might want to sell into, right? So really, really cool and interesting stuff. And if it's your firm, if you go there and check your firm out, you can claim it. Or if it's a firm that you're interested in kind of following, you can click the follow button and kind of build your own little network of RIAs that you're interested in. Just super, super cool stuff. So you're starting to see some of the data firepower come out of Truelytics. And so it's a very similar story to Benjamin, right? A solution was built for internal use to serve the clients that they have. Next thing you know, it becomes a different product. So really exciting times for Truelytics and, of course, for Benjamin as well. So Before we get to our conversation with Matt, please do make sure you like and subscribe to the show and tell a friend about it, right? Like this show gets more popular because we keep telling people about it. Like it, share it on social. If you're getting value out of it, and I think you are because you're listening, chances are your colleagues will as well. So let's do a little rising tide lifts all boats type of thing and spread the word about the Modern Financial Advisor podcast. Okay. Without further ado and blabbering on from me, let's get to it with Matt Reiner of Benjamin. Matt, buddy, I'm so excited to have you on the show. I really enjoyed our prep call conversation, and I've been looking forward to this episode of the podcast for quite some time. So welcome to the Modern Financial Advisor podcast.
Well, Mike, thank you so much for having me. I'm extremely grateful for you adding me to the list of guests, and hopefully I can live up to the prior guests that you've already had on the show. So looking forward to it.
The hype machine is hard to live up to, I think, right?
The challenge is when the bar is set so high, the pressure gets put on. But it's pressure I enjoy, so I'll take it.
It's really funny. I've been doing this for a long time, right? I've been doing podcasts since 2007. And when you have a guest on a show, you do the prep call and you can usually tell really quickly in the prep call whether it's going to be a good episode or not, right? Because there are some folks you have to pull answers out of you. Like they give you like my dad as an example. My dad would be a terrible podcast guest because he tends to give really closed end answers like, yup. And yeah, I agree. And he's just like, you're like, Dad, help me out.
Well, when we talked about it, see, you're the smart podcaster. Hence the reason your podcasts have the following they do is, I have a podcast and I don't do the prep call. So I just go in kind of, blind. I send some questions over. And so you at least can kind of vet that out before. I've had some podcast guests on my show, Bridging the Gap. And, we get on there and it's like, okay, we've gone through all of the 10 questions that I sent over already. And we've only been on for 10 minutes. And it's like, all right, I got to figure something out here to keep this thing going or just cut it loose and just move forward. So I get that big time.
That's funny. A little bit of treading water to kind of fill some space there. It's funny for those people who haven't done it. And I don't look, the topic of this podcast episode is not podcast, but it is, I think, informative and interesting to people in general. It is not as easy as people think it is. So you fire up the microphone and talk for a while, but stay interested, stay interesting, right? And it is a stamina. It's a stamina game, and it takes, you build up the skill over time. So it sounds like you're doing a great job, though. I'd imagine.
And you need to prep for it too, right? But that's also the same thing with video. We do a lot of video, and it's the same thing, right? Everybody thinks that they can just, I always wondered. I'm just like, just put the camera in front of you and just start talking. But it takes a different, mentality that you have to go into. You can't just go and start talking like you're talking to a friend, even though that's everybody's advice. There is some preparation that goes into it. So you're exactly right.
Yeah, it's just you get more comfortable over time. That's the thing that I always tell people is like the more you do it, the better you'll feel about it because you'll relax, right? It's well, hey, kind of switching gears to the space that we're focused on, right? The advisors that you serve, almost every single one of them at some point in time everyone was a new advisor, right? And so the first time they sat down in front of a prospect to talk to them, I guarantee you they had the sweaty palms, they had the Jimmy leg, they were all nervous and so forth. But over time, you've done it enough. You know what questions you're going to ask. You can handle any of the objections that somebody may have or any of that type of stuff. So you kind of settle down a little bit. And I think the same is true for this type of stuff.
Yeah. I mean, speaking on that, going to the financial advisor side and kind of transitioning into that part of the conversation. I mean, I come from being a financial advisor. And so I remember, when you're saying that, I have visuals of my first meeting with my first ever client. I mean, I remember I was 23 years old and sitting
Oh,
across
wow.
the desk of a 60-year-old that's wanting to retire. And, just, 2 years ago or a year and a half ago, I was, out at school and, doing college type things. And now this 60-year-old's asking me, what do I need to do to retire in 2 years? And I remember that like yesterday, and where I've evolved to in terms of my professional life. But when I was an advisor, is quite drastic. So you do just have to go and that was the best learning experience that I had, was just being thrown into the fire, figuring it out. You figure out how to do the right thing, and you just got to be comfortable saying, hey, I need help with this, or I just need to continue doing it more and going forward. So you're exactly right. It's like with anything that you need to just get on the bike and go.
Yeah. Yeah. So, you were an advisor, and I think you still, maintain your licenses, and you're still an active owner of the firm that you're with. Is that correct?
Yeah, so I still keep a small book of my business just to keep my finger on the pulse of what's going on and what advisors are going through. We sell technology to other advisors, but I like to keep understanding what's going on in the market, what are the concerns of the clients, and that also drives some of our product roadmap on the technology side. And I'm also still a managing partner in both of our RIA firms that we have here in Atlanta as well. And I think that that provides me an ability to really have some really good, deep conversations with our clients about their firms, what they experience, because I sat in that seat and I still sit on the board, and I see some of the challenges that RIAs go through today.
That's fantastic. You and I were chatting a little bit about this before in our prep call about how important it is for somebody who's serving this industry to have some experience in the industry, right? You have to have a subject matter expertise that is different than a lot of other industries, right? You really just have to know the space because it's so challenging, right? The advisory world doesn't look like any other business, and the advisors, once they're growing their business, are facing challenges or doing things that wouldn't fly in any other business, right? Just due to the structural component of the business. As an example, it's oftentimes
Yeah,
recurring revenue and lifestyle business and so forth. So
yeah, I think that there's so many intricacies of it, and there's so many different types of businesses in our industry. And then you have the compliance factor and the regulation factor. It's similar to banks and the moat that's been put around there. You also have the lack, the lack of desire for innovation in our industry, which you have to understand if you're going to come and innovate in the industry and not get turned away. You have to understand, what are their pain points? What is it inside their practice and their firm that really drives the struggles? And it's innovation and disruption does happen from outside people coming into a new industry. And I think that, what we've seen with the robo advisors and some of the disruption that's happened in other spaces within fintech over the past 10 to 15 years, a lot of it's been from people outside the industry coming in and doing new things, and maybe they didn't quite work, but it made people, industry insiders, be like, oh my gosh, this is something that we need to adopt, and then they can go and take and run with it. But then you also have firms like Orion and Wealthbox, et cetera, that had some experience in the space a little bit, Orion a little bit more, and they were able to innovate and really excel in that space. And you really have to understand the pain points, because we're talking about a service based industry where emotions are a huge driver of decision making. And you have to there's another intermediary that is playing a part with this sell, is the end client, right? The end client is the most precious thing to a financial advisor. And when you're selling technology to an advisor, if you're selling it just for the advisor and for their purposes and not taking into account what it means for the client, it's going to be harder to sell, and it's going to be harder to get adoption, because the advisor never wants to do anything or adopt anything that rocks the boat of their relationship with their client, because that is the most precious thing. And the client has big worries, because we're not just talking about a service like like an Uber service of a car service. This is their retirement savings. It's the most precious thing to them that they've ever done, and you can't really go back and recover that, right? You can't go buy a new car. You can't go and resave retirement again and get another job at 20 and start over, right? You get
right.
one shot at this. And so it's a really interesting and unique perspective. That doesn't mean that innovation can't happen and it shouldn't happen. It actually can happen and it should happen. But it's just, it has to be, you have to really take into part all of the players and all the emotions and the psychological aspect of the industry as a whole.
I really love that you brought that up, that things are slow moving almost by design in this industry, right? Because look, we're dealing with people's livelihoods here. Their financial futures, their financial presence, right? And in order to protect those investors and to protect people's lives, you can't be reckless and move too quickly. So I think that's a really really smart.
And it's been a challenge. Just to elaborate on that for 1 second, it is a challenge, right? When I was, and I kind of pushed some of the technology innovation initiatives for the RAs, and I talked to other firms when we're talking on the Benjamin side as well. And I say that there's three points that you have to have in your firm to be an innovative, forward-thinking advisory firm, and they have to go in this order. You have to have a why, right? Why are you doing what you're doing? Why do you ride the roller coaster of the investment world and financial planning world? and drive into the office or work from home and have back to back to back Zoom calls every day? Why do you do it? What is your why? And it's not just because you want to help people invest their money. It's you got to have a deeper why. And one of the firms that on the board of is it's to help families find happiness in retirement. That's why everybody in that firm goes in every single day to drive forward. So you have to have that why. And the second, you have to have this culture of learning, right? And the culture of learning is really a hard one, right? Because like in a tech firm, you can go and send out some code on something and it doesn't work and it breaks and someone sends in a support ticket and says this doesn't work and then you go and fix it. And you tried it and you iterated on it. You can't necessarily have that same iteration or that kind of level of value in failure in an RIA. Because if you go and you invest someone into just one stock and it goes bad and they lose all their retirement savings, that's a bad outcome, right? And that's a really bad outcome. And so you have to find that balance. And I've always said that we praise failure, but we praise failure on trying things on the fringes to make the experience of the client better, right? And the way that we can serve more clients and have more relationships better. And so you have to change that mentality, but you still have to have a culture of learning because you're going to adopt technology internally. That's not going to work. And you got to be comfortable with iterating it and figuring out why is it not working? How can we make it better? And then that gets to the third point, which is adoption of technology. You can't adopt technology if you don't have a firm why and you don't have a culture of learning because technology will be pushed off like it is in many advisory firms as, hey, this didn't work as I thought it would right out the gate. So I'm done. We're going to just keep staying the way it is. And we're just going to get behind because other firms are going to innovate and iterate and we're not. And so that's why you have to have those three. But the idea of the culture of learning, that middle vertical is really difficult because a tech firm will come in and be like, you should just try this, but you don't realize what it means to the end client and the kind of the comfort level of failure in an advisory firm is much less because of that life savings aspect.
So I love that segue into the adoption of technology and making sure that you understand the value and the stakes, frankly, for the advisor. This is the third episode of this podcast, the Modern Financial Advisor podcast, in which we're featuring a guest who is leading an AI powered solution for advisors, right? The first one, actually, the most recent one was Advise in July. We had the founders, Samir and Runik, on to talk about their portfolio management solution, which allows advisors to create custom portfolios as easy as they might do a model portfolio for each individual client. And that's something that would be a total pain in the butt to do manually. And then in the early days of the show, I had Jamie Wise of Buzz Indexes on, and Buzz uses artificial intelligence and machine learning to analyze, Twitter and Facebook and all these public posts all over the internet on large cap stocks to create a stock index that is actually outpaced the S&P 500 since inception. So they've got like more than 5 years of history doing it. It's crushing it. But in both of those cases, the use case for artificial intelligence is looking at really large data sets and lots of variables and doing the heavy lifting with computer, right? With an algorithm or what have you. If we look at Benjamin, and that's why you're here today, talk about Benjamin a little bit. On the website, the lead tag is, Benjamin is a financial advisor industry's premier cloud AI assistant, which seamlessly integrates the software tools and data used by advisors and their teams to better service their clients. So there it is again. You're just teeing up with like the whole concept is to better service the clients. So how are you leveraging artificial intelligence to do that, to accomplish that goal?
Yeah, so our goal at Benjamin is to overarching mission and vision is to change the way that financial services industry serves their clients. And we believe one of our core values is be human centric. And you think for a technology company, that's interesting, right? Why is be human centric a technology core value? It's because our goal is to build technology that allows others to have deeper, more meaningful, and more in overall relationships, right? This is a relationship business. And how AI and technology can help us is can help to take away the menial mundane tasks that are necessary in our day-to-day actions to keep our clients happy and maintain the relationship, et cetera, so that we can have conversations with our clients more deeply about what are their personal desires, where do they want to go, what do they want to do with their money, how can we help them do that as opposed to having to monitor paperwork to get submitted, monitor trades, execute on trades, rebalance portfolios, all those types of things. How can we take those off the plate so that you can have deep relationships. Ask them about their grandkids, their kids, what are their kids' desires? How can we get them into the conversation? Those are deep relationships, right? There was a study I read where, to have a deep, really meaningful relationship with a friend, you really need 160 hours of communication, right? 160 hours. That's a lot of time to
It
really
is,
have
yeah.
that. And ultimately, I think that the core value proposition of a financial advisor is the relationship they have, right? How do you become a financial advisor to where the client says, I can never leave that financial advisor no matter what the market's doing, no matter what is happening, because it would be like I'm leaving a person, a part of my family. And what we're trying to do with Benjamin is to start eliminating all of those tasks that we saw that we were doing day in and day out that was keeping us from scaling our business. Because our hypothesis as a company is that the industry is not facing fee compression, right? It's not facing lowering fees. Yes, trade costs are going down, costs of ETFs are going down, mutual funds, et cetera, are going down. But from an advisor, we believe that an advisor will continue to charge the same assets under management fee as they are today. And there's been some studies that show even they could even raise it. But the challenge is that their clients are going to require them to provide them with more services, more value, and more servicing for that same fee, which means that it's going to bloat the middle of a P&L, which means that the true challenge is margin compression by charging the same fee. And so what advisors have to figure out is, how can I do more for my clients and for more clients with the same? How do I scale my team and myself so that I can get more time to dedicate to current individuals and more individuals, and make sure that they get the same white glove service that we want to provide every single day? And the way that you do that is you automate processes, you automate tasks, you get deeper integrations with your technologies. And so Benjamin integrates into the technologies that an advisor uses today because they're not talking to each other. So he's really the central hub, and he then takes tasks and information to create a data warehouse of all that information to allow for him to go and execute on tasks that fall into really three main buckets. You've got meetings, you've got onboarding, and then you've got proactive maintenance. And that's including anything of continuing to maintain the client relationship going forward, anything like follow ups from a financial plan to pinging them on certain trades that are happening. And the goal of Benjamin is to utilize simple or AI initially. And then as the client becomes a client of Benjamin for a longer and longer period of time and the community continues to evolve, Benjamin then provides next best action insights. So intelligent insights to the advisors on, now that we've created time by taking off all that menial mundane tasks with Benjamin, the next way is now, how do you use that free time to better grow your relationships and grow more relationships with clients utilizing your free time? So Benjamin simplifies and makes it simpler on the front end, and then next best action intelligent insights on, hey, this client, you may need to schedule a 15-minute conversation, because if you don't, they're going to email you asking in the next 7 to 10 days. So it may be important for you just to go and schedule that meeting going forward. And so that's where we're taking Benjamin and enhancing him into the relationship, but it's all focused on allowing the advisor and the client to have a better, more meaningful and valuable relationship, even beyond anybody's wildest dreams of what they think a relationship should have today.
I really love that notion, and you kind of it's a little bit of a challenge to something that I was talking about with Terry Mullen, the CEO of Truelytics, and Jason Gallagher of Viewpoint Strategies Group. We were talking about this on the previous podcast episode, and they were talking about fee compression, and we've seen fee compression, particularly on commissions. All right, commissions are zero now, right? But I like the fact that you're challenged that, listen, it's probably not, advisory fees are probably not going to go down very much. And in some cases, they may be able to go up for a higher white glove service. But that big challenge that you mentioned, margin compression, is the thing that's really a big challenge. And even if fees are to stay the same, many advisors are not earning the margins that they should, because they're focused more on, top line growth, and they're providing a lot of services that cost a lot to deliver in terms of that white glove service. And so they're really not looking at that bottom line as much. Can you share a bit about how Benjamin more specifically can help an advisor improve their profitability, improve that margin?
Yeah, so it's all about giving hours back in the day, right? And so, you know, the way that we look at it is, it says, okay, you have multiple levers on each individual task. So Benjamin looks at each individual task and break it down into the simplest aspect. Let's just use the simplest task that we know of within the financial advisory space of scheduling meetings, right? We know that there's scheduling applications out there like Calendly and Schedule Once, and those are solutions that can be used within Benjamin as well. We're not trying to replace technologies out there. We're trying to create a technology that brings everything together to make the job of an advisor more efficient. So if you have 100 clients and you meet with your clients every quarter, whether that's you or your assistant on your team, you have to schedule 400 meetings a year, right? That's at least sending 400 emails, that's following up, that's updating a CRM, right? So you have to send the email, you have to update the CRM, you have to then follow up with again, then you have to schedule the on the calendar, make sure the times work, confirm the meeting, then do meeting preparation, right? These things are adding up. And there's multiple studies out there that show that our days as advisors and our team's days as on the team is 30 to 40% of the time. So if you can take that task off, right, 400 scheduling meetings, and give it to an AI assistant that runs it through based off of their last meeting, their whatever the cadence needs to be, whatever their schedule is, etc., and can take all of that off, and then also not only schedule the meeting utilizing a link like Calendly or Schedule Once, or scheduling it through Benjamin, but then can help with the meeting preparation, get the materials ready like reports and then simple analysis, and if future integrations will allow for us to pull financial plans, etc. If we can get all of that ready and delivered to the advisor prior, then now we're not only creating more time for the team member, but also the advisor, which means now they can go do higher level tasks. So a specific example of how we did this with a larger firm is that we had a large financial advisory firm that was using Benjamin. They were moving custodians. So they're repapering about 500 accounts across 200 families from custodian A to custodian B. And they did everything via DocuSign. And if you've ever repapered clients, for instance, it is a bear, right? And it takes months upon months to do, which delays charging fees, it delays revenue, everything of that nature. And so with what they did is that they had everybody already set up in DocuSign because that's an easy upload that can be done. They had all the paperwork filled out, and they did it in 3 different batches. And they sent out the first batch of paperwork to the first 50 families. And this is DocuSign, electronic signature, very simple, click, 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 sign, done, right? So we already have efficiency there. They sent it out. 7 days later, they had gotten 10 packets of information, or 10 envelopes, as they say in DocuSign terms, back for that. So they had 40 families still yet to be done. In a traditional advisory firm that's not using Benjamin, the next step is for the assistant or the advisor to call each of those people or send an email to all 40, hoping it gets through, and then they find the DocuSign envelope and then redo it. Many people will send back and be like, hey, can you send it to me again, etc. What we did instead of doing that is that we actually assigned a task from within the CRM of the advisor to Benjamin to follow up with all of the people that have recently gotten a DocuSign envelope. And Benjamin was able to send that out within just a few minutes. And literally within 8 minutes, the advisor and their team got 10 sets of documents back. Not everybody responded, but they got 10 documents back, envelopes, within 8 minutes. And they were able to go and get 90% of their clients repapered within 60 days using that same process. And so you think about if a typical advisor takes 120 days, we just gave back, Benjamin just gave back 60 days worth of time. Not to mention that now if that was a client going from one advisor to another advisor, the amount of, that's 2 months worth of fees being generated as well on the advisor side, and 2 months less that the client's worrying about the transition, et cetera, and they're invested in moving forward as well, and the comfort that provides. And so that is creating scale, and we look at it as an ROI. We have an ROI calculator that looks at all the tasks that Benjamin's doing, how much of that task is Benjamin doing for that specific advisor and their team. And then we have levers of, do we do more tasks or do we do more of the certain tasks to give back more time? And we're showing how many more families each advisor, client service associate, administrator can now handle. And our ROI that we deliver back to our clients is showing this is how much more time is being saved, which means that if we can delay a hire 6, 12, 18 months, that's the direct ROI to the bottom line that's now scaling a firm. And you can see in the 2019 Schwab RIA benchmarking study, if you look at the breakouts of every they did it based on groupings of AUM, so 100 to 250, 250 to 500, et cetera, and they showed profit margins. And it's pretty remarkable that you have high profit margins at 100 to 250 million, and then it drops, and then it goes back up, and then it drops. And so you have these areas where you have scale challenges, where what advisory firms do today is they just go and hire a ton more people. They're like, oh my gosh, we're growing, let's go hire more people. And then they see their margins drop, and then they go up, but then they drop again. And if you can't get out of that segment, then you have lower margins now going forward. And so what we're trying to do is level that off. So across, no matter if you're growing, you can grow and keep your profit margin the same, by scaling your team and delaying hires until you get even larger revenues, which means that your bottom line profitability becomes better when you go and hire that $60,000 or $100,000 individual to come in to help take on some really high value growth oriented initiatives in your firm.
That ROI metric that you mentioned, and advisors usually do ask that, like, what's the ROI of whatever the activity they're about to spend money on it? Not only because it's a smart business question, but it's also something that I think we all feel like we should ask, right? Like, what am I going to get back out of this if I'm spending X amount of dollars a month or a year or whatever on the solution? One of the things you mentioned though is speed to repaper. The ROI there is if I get one extra month, if it usually takes 90 days and it takes 60 days in the instance that you mentioned, that's like one extra month of revenue from the clients. Pretty good,
Yep.
right? That's a
That's
good
real
ROI.
dollars.
Yeah. If I can close new prospects faster, right? If Benjamin allows me to automate some things that will allow a client to come on faster, that's a higher ROI, right? So lots of stuff that fall into that category. One thing that I think would be kind of helpful because I'm thinking through it, and again, I'm very tech forward. I understand how a lot of AI works. I understand how a lot of like programmatic, if then, if this then that type of scenarios work with a lot of tech. But I wonder if maybe some of the listeners don't. So there's a saying in the military: break it down Barney style, right? Like Barney the dinosaur. Let's like really simplify how Benjamin works so that if somebody is a little either uncomfortable with the notion of artificial intelligence potentially interacting with their clients and what that means, right? It's not like Hal from the 2001 Space Odyssey. Right? It's basically automating some tasks, right? And if one thing happens, then the computer system triggers another thing, kind of like a macro that you might have used in Excel, or a filter that you might use on email. If you get an email from this person, put it into this folder, right? Or trigger an auto reply or something like that. But it's a little more advanced than that. So I wonder if maybe you can kind of again break it down Barney style for like, how does Benjamin work for, I guess, one of the more popular tasks that people use it for?
Yeah, I mean, so I think that's a great kind of concept, and let's just take scheduling meetings. Let's just stay on that side of it, right? That's just something that's really common in the advisory firm. And so, what we look at right now within Benjamin is we look at it in three tiers of AI, right? You have what's called RPA. So if I use that word, it means robotic process automation. That is what you're saying. If this, then go do that, then go do that. If X, then go do Y, then do Z, and then close, right? And then you have natural language processing, which is the ability for you to text something back in the computer to understand it and be able to respond back with an answer, right? Creating this kind of repertoire of being able to have a conversation. That's really important in what we're doing because we're trying to complete tasks. And then the third is kind of that concept of neural network, which is just a big word. But all we're doing is we're taking all of the if then that statements and training Benjamin over time to where he can create those on his own without anybody helping him. And that's where you start to then get into like the really deepness of the deep learning of AI. So let's take meeting scheduling for instance. Right now, how it's done. Let's just do this the top level, if then this then that type scenario. How it's done today is that you go into your CRM, you're using Salesforce Wealthbox, you put into a task of saying schedule meeting, and you assign it to someone on your team, your operations team, administrative team, whatever it may be, and you associate it with a client. You put a due date of, I want them to schedule the meeting. Reach out to them tomorrow. So you put the due date as August 5th. And so then the person goes in, gets it, calls the client, emails the client, etc. So now with Benjamin, what you're able to do is that Benjamin actually, as opposed to us saying just schedule meeting, you can assign it to Benjamin. And you can assign it in multiple ways. You can say Benjamin schedule meeting, or you can have a category for Benjamin meeting schedule, or you can tag it, whichever way. And Benjamin's trained on that. And when he sees that task every day, he goes in just like an employee. He is a true AI assistant, right? He's just like you would have an assistant. He has his own task list, but he's able to run through millions of tasks at a time and execute them and keep track of them and update them. So he would see that task. He would reach out to the client based on their preferred communication medium, which is seen within the CRM and other data sources that come into Benjamin. So it could be text message or email, asking to schedule the meeting. He then is either using a Calendly link or he's having a conversation with the client. to schedule the meeting. He knows who the advisor is associated with the client. He knows all the times because he's connected to the calendar. And then once he sees that the meeting is scheduled either by himself or by a link, then he actually goes and completes the task. Now, if the task isn't complete and the person didn't schedule it, then he's going to be an assistant and he's going to go and update the task. He's going to move it out and he's going to go do it again. He's going to continuously do this, and he's able to then ping what we call as the Benjamin boss every day, every week, every month of what he's been doing, what he's been up to, where he's had success, where he hasn't. And he'll continue to follow up with the client until he gets the meeting scheduled. He'll put it on the calendar and he's now eliminated that task. So that's a very simple scenario of how it would work just on the schedule meeting side. And we're not just a scheduling app, it's just the simplest,
Right.
most abundant task that people tend to do. But that's how it would work. And so then what Benjamin is doing is, because he's doing that so frequently for that one specific advisor and advisory firm, and then all the other advisors across the country, he can start to predict when and if the client's meetings are valuable, and he can then start creating the task on his own going forward. He can say, you know what, this client, they only schedule 2 meetings a year. I know it says it's quarterly, but I'm actually going to schedule it 2 times a year because that's when there's most value for the client. And he then takes it over and now becomes self-learned or self-taught and is able to continue and be the executor of that specific vertical of tasks for the firm going forward. And so that's ultimately how we're using AI today, and how we're thinking of it in the future to better leverage time for the advisor and their team.
That's really smart. Now, you mentioned the Benjamin boss. Does that mean, I think it's probably a logical question that somebody might have, is like, do I have visibility into what this thing is doing, with interacting with my clients? Specifically, you mentioned with the scheduling portion, and I know that's only one thing, but I would imagine if I'm an advisor, especially in the early days, I want to make sure I can, I don't know, see a log or some sort of report that show me that. Does the advisor have visibility into that?
Yeah, so right now the advisor can see all the conversations that Benjamin's having. And we're actually having a really big release here in the next couple of months, which is actually so right now the Benjamin team, internal team, has done all the training of Benjamin. We're actually going to turn those reins over to the advisor and their team. And so we have a big release coming here in the next couple of months that's going to allow the team to actually, just based on all their data and their tasks, they can train Benjamin and they will have full transparency into what Benjamin is doing and how he does it. And it can be unique and specific to each firm going forward. The one thing that, going back to the Benjamin boss scenario, though, is why we did that is, what I realized when I was an advisor is that I hated adopting new technology. I love technology, but it was just, I had another login. It was never connected. It was very clunky. It would always do something, but it would just create another task for me and another burden for me somewhere else. And so I was like, you know what? I'm just not going to do it. And I can never get full adoption with our team, et cetera. So I was like, you know what, we're just not going to do it. And that was kind of because of the technology companies and the integrations, et cetera. But what I said when we started this company was, how do we release a technology solution to where you don't have to get firm-wide uh, buy-in or understanding of the technology for them to get value out of the technology, right? How do you get an owner or someone that is an advocate of the technology to be the driver of it, and then you can then win people over time by them seeing the value in the interactions with Benjamin. And so the Benjamin boss is a way for that to happen. The Benjamin boss is the advocate. They're the one that log into Benjamin, and they're the ones that train Benjamin, that can see the conversations, that can set up new users, can do all of that. But the advisor ABC, they may not want to have another login, but they really want the benefit of it. So they can continue to live in the technology they're living in, which they may be really proficient and efficient in their CRM and their portfolio management system. They can continue to live in there, but still get the value of Benjamin. And so that's a way of lowering that hurdle to get adoption of new technology. But then the second big thing is that we focus on allowing Benjamin to provide a lot of insight internally first, right? So a lot of the first tasks that Benjamin do is a lot of internal tasks of communicating with the advisor and the team on different updates and different notices and different things for them to think about with regards to their own current clients. So they can see how Benjamin's interacting. They start getting comfortable and they're like, I really like this Benjamin guy. He reminded me of this birthday that I forgot about that never showed up. And I was able just to click on the text message and call my client, and it was really comforting. And they start to really get this like kind of personal connection. Hence the reason why we named him Benjamin, is that we think it's a relationship business. And so then they become more comfortable with then releasing Benjamin into the ecosphere of their clients, right? So it's an iterative process, but they don't have to go and learn anything. They just see it. They see the value, and then they feel comfortable with the solution itself, as opposed to having to learn how to train Benjamin and go in and log in, etc. From that standpoint, that was really the impetus behind the Benjamin boss.
So, I'm glad you brought that up because, we talk about it all the time, not only on this podcast, but I think industry wide. The average age of an advisor in the United States is getting close to 60, and 40% or so are actually over 60, right? And many senior advisors are, clocking around 70 now, right? They've built really big books of business and so forth. And sometimes in a more senior segment, they are more resistant to new technology adoption, right? They've gotten comfortable with what works, what they built their business with. How are you seeing adoption in that senior advisor segment of the population? Are you having challenges there, or are you finding that once they kind of see it, touch it, smell it, all that type of stuff, that they're a lot more comfortable with it?
Yeah, I think that it's I hate using this term, it's hit or miss, I guess,
Yeah.
with that segment, right? And I think that right now with Benjamin, it's a technology that's unique for this space. It's different. It's a different way of thinking. It's a different way of building your efficiencies in your practice and your firm and running your firm, because we've always just been trained just to hire more people, just hire more people. And so this is a different way of thinking. And so we're in that innovator, like a early adopter stage, right, of the technology. And usually, if the 60-year-olds that are adopting it, they have a kind of they planned out their firm, did some legacy planning of how to pass the firm down. And so there's usually the kind of the advocate for Benjamin is usually a younger advisor. And so the older advisors, if they're just in a lifestyle business, some of them are very still innovative and still trying to create efficiency. And I've really I've really, one of the questions that is still out there that I'm constantly trying to solve, just as on a personal level and also from a Benjamin level, is why is over the next 10 years everybody says, well, you got to change, like you read all these studies, what the financial advisor of 2030 looks like, 2035, etc. What is going to be the impetus for an advisor to change? Why is an advisor going to change, right? And I think about it for like the 60-year-old advisor, the 50-year-old advisor, and I think that it goes back to an advisor is going to change when they start making less money, right? That's why they haven't been forced to change. Things have been good, they make a lot of money. And I think that what's going to cause them to make less money is you're starting to see a lot of firms, larger firms, and it could be the trend of everybody going to a roll up and the RIA industry becoming bigger and people coming away and breaking away from wirehouses and kind of and going into these roll-ups and having that scale and efficiency. But these roll-ups and these larger RIAs are creating scale. And it's going to be harder and harder for smaller firms to compete with that scale from that standpoint. What's going to happen is they're going to start losing some clients. Either the clients are going to either pass the money on, or they're going to leave and go to one of these other firms that has some, more services and more value offerings for a same fee and goes above and beyond. And I think that the reason I bring that up is that that's what the 60-year-old advisor, 65-year-old advisor that's starting to see some of that, they're the ones that are adopting this, because they're saying, you know what, I'm starting to see some of that in my practice, and so I'm adopting it. The ones that are 60 and they haven't yet seen that, they're not seeing that because they're not willing to adopt this type of technology yet, because things are still good and they may only want to be doing this business for another 3 or 5 years, and so they're okay with that. But if they want to do it for 10, 15 years and keep this to pass on to others or to sell the practice, then those are the ones that have the mentality of saying, I know I need to create efficiency, I need to create profitability, I need to do some financial leveraging of my P&L, and this is one way of doing it to get my profit margin boosted, either to sell, to pass on, or for me to take home in my next 10 years.
It's interesting. We've been talking a little bit about this with the team over at Skyview Partners, which has a relationship with Trulytics, that you're starting to see a lot more partial sales, right? With senior advisors who are thinking about retirement, but they don't want to just have that kind of like hard stop. They might want to have a glide path to retirement. And instead of selling the whole business, they sell a portion of the business and kind of glide into retirement, or maybe just keep their favorite clients, and then they get to work a little less. It seems to me that Benjamin might also be a solution that allows that advisor to start to glide into retirement, right? Like instead of having to work, I don't know, a 40-hour work week, which is, pretty common for advisors who've been at this for a while. Maybe they can bring it down to a 20-hour work week and spend more time with their wife and their grandchildren and so forth while maintaining the same book and not have to just kind of pull the ripcord on it's either retire or not retire.
Yeah, I mean, you nail it on the head, right? That's a way for, we always talk about the ROI of what Benjamin provides, and the many firms that come to us, they're trying to figure out how to get their current people out of those tasks that they don't love and enjoy, and into tasks that they do, those higher value, client facing, relationship driven type tasks, and do it in a way that doesn't impact the bottom line and allows for the firm to continue to grow, right? And so that's how some firms. But then there are other firms of ROI of saying, you know what, I just want more time to go do whatever it is I want to do, but I don't want to let my clients fall through. And I just want to be, I don't want to have necessarily an admin. I want to be traveling around. And that's another way of creating ROI, right? It may not, it creates maybe some profitability, but it's more valuable for them to have time. And Benjamin can take off all of those different tasks and say, you know what, you want 100 clients and that's it. Benjamin will alert them when he thinks that they should trade their account, or when they need to schedule the meeting and go and take care of that and help with tracking the paperwork and do all that type of stuff that can allow for you to have that free time and go maybe from 40 hours to 30 hours a week. And then the advisors say, what's the value of that to them? What does 10 hours a week mean to them? And are they willing to pay for a piece of technology to help with that? And I think that it's a different ROI calculation, but it's actually very similar in terms of nature, in terms of how we look at it at Benjamin when delivering that ROI calculator to the client.
Yeah, that's really smart. I mean, we all have that in our business. The things that they do take time, but it's not even just the time. It's kind of like there's a pain in the butt factor, right? Of
Yeah,
that thing that you're doing. Like, hey, look, it's not hard. It just takes me a lot of time to do this, or it's harder than it should be, right? Like, there's always that task of like, this shouldn't be this complicated. There shouldn't be this many steps in there. So if I could automate, it'd be great. Uh,
but if you think about, sorry to cut you off, Mike, but
okay.
if you think about why those tasks are like so difficult and time consuming, it's because we have to. It's the debate and the concept of the push versus the pull, right? Is that we have to go pull all the information, aggregate it together, analyze it, determine whether we need to take action, etc. Right? That pull. And so if you can just flip that art, how that's how we run day in and day out with all of our tasks. We go pull, we go do, you pull the information to determine what needs to be done, etc. If you can just flip that equation, have everything just pushed to you when it needs to be done, you know how much mental capacity that's going to create, and then how less of time you're going to spend doing many of the tasks that we're doing. And that's what a lot of what Benjamin's doing is he's flipping that equation to be a push as opposed to a pull, to create the mental capacity so you can focus on whatever it is that you want to do, whether that's growing your business or spending more time with your family. It doesn't matter, but that's ultimately the kind of the foundation of how do we create time in our day to day.
I love it. I love it. So before I let you go, I mean, we're getting close to wrapping it up here, but I'd be remiss if we didn't kind of revisit the kind of the top three tasks that Benjamin can do for an advisor. I mean, things that you're seeing that are most common, right? Because we spent a lot of time talking about scheduling. We talked a little bit about how it helped in the repapering process, but if I'm an advisor sitting here listening to this podcast, or I'm in my car or whatever, or got my AirPods on a walk, as I start to think about my business, what are a couple of other things that might be easily recognizable for an advisor and then go, oh, it could help with that. It could save me time doing that. What are you seeing that are more common uses in addition to scheduling?
Yeah, so let's stay on that push. Let's stay on that push versus pull idea, right? So, we all that there's a lot of people out there that have mobile assistants and they go to the mobile assistant to put in notes after meeting, right? That you have to remember to do it, mental capacity. Benjamin, because he schedules the meeting, or because he's connected and integrated to your calendar, he sees when you have a meeting. So as opposed to you having to worry about going and putting in notes into the CRM or going to your mobile assistant, Benjamin actually just texts you and you just respond back to him either via voice or texting, and he puts the notes in for the client from that standpoint. So again, a huge time saver, a compliance factor, and it makes it very simple to where you don't even have to think about it. Benjamin's on top of it from there. The second is really with tracking the paperwork, right? Is you send the paperwork out, that's great, but Benjamin is able to integrate via the integration with DocuSign and also the custodial data feeds that we have, is able to track and monitor whether the accounts have been opened, and is consistently nudging in a friendly and non-intrusive way the client to get the paperwork back to speed up that process. And you basically just are assigning that via a workflow or a task within your CRM. And then finally, it's a lot of those kind of what is unique to your firm, right? The proactive maintenance. And it's, when clients contribute over a certain threshold, right, to create a task in the CRM for the trader on the firm to go trade the account, or when a client contributes over a certain amount of money to let you know how much cash they have so you can determine whether to put it to work, or when bonds are maturing, just to ping you the day before or the day of so you can put money to work before the client sees it and ask what you're going to do with the cash. Those types of things, these things that we either that are really time intrusive, or those things that we wish we could do for every client, but we may only do it for a segment of our clients, can now be taken off of your plate and elevate your time while not losing that white glove service that you want to provide to each and every one of your clients that you have, no matter the size or no matter the time commitment that they are, or however new they are. And so those are some of the ways that Benjamin can help right out the gate. And then there's a lot of specific ways based on the data within the integrations of each individual firm. But those are ones that you turn on out of the gate, ready to go and able to add value.
That's fantastic. Matt, it is clear that you and your team came from the space, right? Because you really just listening to you there, just have a deep dive understanding, and not only just an understanding, an appreciation for how important all these different elements are. I'm sure some of the people who are listening to this episode, whether they're advisors or somebody at a broker dealer or a large RIA firm, may have some interest in learning more and want to kind of follow up with you. What's the best way for somebody to get in touch with you if they want to ping you individually or find out more about Benjamin?
Yeah, so they can feel free to email me, matt@getbenjamin.com. Also, I'm very active on both LinkedIn and Twitter at Matt Reiner. And so feel free to reach out to me on those channels. And I try to provide video and audio content that's helpful thinking through how to create processes and future-proof your advisory firm. But those would be the three verticals that would be best to reach out and that I can connect with you.
Oh, then also follow up with and subscribe to your podcast. You mentioned the podcast at the top of this. Make sure give that a little
Bridging the gap. Bridging the
bridging the
gap. We
gap.
had
There you go.
about a year ago. We had a person on that machine learning expert, and so you can listen to that one to understand artificial intelligence, machine learning, and he was able to break it down in a really concise and simple way. So check that one out.
I love it. Well, Matt, I really appreciate you coming on the show with me today. I learned a ton, and I'm sure the listeners did as well. So thank you, sir.
Thank you for having me, Mike. Appreciate it.
All right, buddy. Stay safe. All right. Thank you very much for listening to this episode of the Modern Financial Advisor podcast, brought to you by Truelytics. It's an honor to have you, and it's an even bigger honor to get your questions or suggestions for topics or guests for this show. So make sure you send them in to podcast@Truelytics or hook us up on the socials. You can reach Truelytics on Twitter, LinkedIn, Facebook, wherever you like to kind of interact with the world. You can also find me. I'm at Mike Langford just about everywhere, and I'd love to hear from you as well. We're having a great time producing this podcast. And as I've mentioned before, many of the guests come through suggestions from the listeners. And that's how we actually got Matt. Like somebody reached out and said, hey, this guy, Matt Reiner, who has this company called Benjamin that's really helping financial advisory firms get more efficient with their time and get rid of some of these repetitive tasks so it frees them up to serve their clients better. Kind of like the modern financial advisor way of doing business. He should be on your podcast. And I said, yes, he should. Hook me up. I want to talk to him. So he and I got on a phone call, and sure enough, he was a fantastic guest. So chances are you know somebody who should be on the show, and we want to hear from you. Okay. So again, send them in, podcast@truelytics.com, or swing by truelytics.com and use the contact form there. And as I mentioned earlier in the show, at the kicking things off, swing by RIAbase.com and check that out. I really want to hear what you think, because I've been brainstorming like crazy, some fantastic use cases for that new platform. I mean, the obvious ones are checking up on your business or checking up on competitors and see how they benchmark. But think about some other ones. Like, for instance, one of my friends called me out of the blue saying, hey, listen, I'm thinking about taking my gift giving solution and making it available to financial advisors. And I'm thinking of starting with RIAs. Where do you suggest I get some information? I said, my client Truelytics just launched a new solution. Why don't you go to RIA Base and you can start to search for RIAs in the San Diego area, and you can kind of research them, get to know a little bit about their business and how they stack up against their peers. And maybe you can reach out and start kind of working things that way. So if you're a vendor who sells into RIAs, you might want to check that out. So if asset managers talking to you, right? Go check people out. Or if you want to research, hey, listen, I'm looking for M&A partners. I'm looking for RIAs that might want to join my firm or whatever the deal is. Great place to get started, okay? So check out RIA Base. We want to hear from you. What do you think of the solution and how might you use it, right? So there's all sorts of really cool use cases. All right, that's about it from me. As always, make sure you like and subscribe to the podcast on iTunes, Spotify, Stitcher, SoundCloud, wherever you like to get your podcast jam on. And stay safe and healthy. I want to see you next week on the Modern Financial Advisor podcast. So wear that mask, keep your distance, and be nice to each other. Man, oh man, it's getting a little crazy out there, okay? We'll see you next week on the podcast. See ya. Bye.